Yet again, I am your host in today's video presentation. Wando Franklin is my name, the lead tutor, chief executive officer, and the pioneer of FCO Accountants Tuition Center. In today's presentation, I'm going to look at inventory valuation under IS2. I'll explain how inventories are valued for the purpose of inclusion in the statement of financial position and also in the statement of profit and loss. This video is relevant to SEC knowledge F2 and also to CIMA B3 and also relevant to CA 1.1, that is ZICA. It is also relevant to those doing degree in accountants at the knowledge level of basic accounting. Before I get started, I want to encourage you again to ask questions relating to today's topic in the chat box, and other questions will be attended to depending on the availability of time. Also, I want to encourage you to make comments in the comment section, and all the comments will be taken very, very seriously to improve the delivery of our lectures. Therefore, we are going to look at two questions in this video. The first question there, you are preparing the financial statements for a business. The cost of items in closing inventory is $41,875. This includes some items which cost $1,960, which were damaged in transit. You have estimated that it will cost $360 to repair the items, and they can then be sold for $1,200. So now, I want to explain how inventories are valued. Inventories, according to IS2, are valued at the lower of cost and net realizable value. Inventories are valued at the lower of cost and net realizable value. Net realizable value, whichever is the lower. Now, net realizable value is the estimated selling price or the actual selling price less all marketing costs. The marketing costs here are: 1, repairs to the product; 2, transport cost; repackaging; 4, advertising; 5, these are marketing costs. Now, net realizable value is the estimated or actual selling price of a product less all marketing costs. So you compare with the cost and the net realizable value. Whichever is the lower, that will be the cost of the inventory. Now, looking at this, question here, the cost here, we are given the cost of 1,960. Now, what is the net realizable value? The net realizable value here is equal to the selling price, 1,200, less the repair cost. The repair cost here is 360. So the net realizable value is 840. So the lower is the net realizable value, but the amount included in the inventory was 1960, meaning that the inventories were overstated by the difference, which will be 1120, overstated. So now to make the correction adjustment, the adjustment here will be closing inventory, which is given. The closing inventory here is 41,875, less inventory overstated, which is 1120. So the amount there will be 40,755. That is the adjusted closing inventory. And the correct answer here is option B. So the 40,755 will be taken to the statement of profit or loss, as well as to the statement of financial position under current assets as inventory. So that's how you work out the question. So now we go to part 2 of the question here. Part 2 of the question we have S sells 3 products, best, super, luxury. The following information was available at the year end. What is the value of the inventory at the year end? So here we have the best, the super, the luxury. The luxury here. So we have the original cost. Cost is 6. Their cost 9. Their cost 18. Selling price. The selling price here, we are given 9. They are 12. They are 15. Then the selling, this is transport there, selling and distribution. Selling and distribution cost, they are 1. They are 4. They are 5. So now we need to compare. What is the net realizable value? Net realizable value is equal to the selling price less the marketing cost. Here it will be 8. There, 4 from 12, it will be 8. There, it will be 10. So inventories are valued at the lower of cost and net realizable value. Here, the lower amount is 6. Therefore, the inventory will be valued at 200 units multiplied by 6. It will be 1,200. There, the cost is 9, the net realizable value is 8. So the inventories will be valued at 8, which is lower. This will be 2,000. Here, the cost is 18. The net realizable value is 10. So the inventories will be valued at 10. So there we have 1,500. So total will be 4,700. Therefore, the correct answer there is B. So here, the inventories at the year end, which will be the closing inventory, will be valued at 4,700. So we have used the concept in IS2 valuation of inventories. So for today, we can end here. And I want to take this opportunity on behalf of FCO Accountants Tuition Center to thank you all for the support that you are giving us, both the new subscribers and the existing subscribers. We say thank you for your support. God bless you beyond measure.